I appreciate the chance to speak with you today. Again, my good friend and colleague, Guy Allen, who works with the K-State International Grains Program, and myself would like to talk about, I guess, an overview of the portfolio or the various factors that from the U.S. domestic perspective and foreign perspective that are impacting grain market factors now and are likely to continue off into year 2023. So Guy is in St. Louis at another conference, and Guy, when it's time, just chime on in. So let's go forward. Okay.
Yeah.
So.
All right. Is my microphone working fine?
Yep, we can hear you. So
Good. I've been dropping out intermittently, so if I drop out, just press on.
So I'll kind of go over the list of domestic market issues that we want to talk on. We'll go through these. Then we have a list of international ones. So domestically, thought we'd talk about the impact on agricultural markets from U.S. dollar exchange rates. Also, the effect of the U.S. rail strike that was averted. Guy has some good comments on this. It was averted in the short run. We wonder about the long run impacts of all this. And interplaying with that, if we're not shipping grain by rail, we're going down the river system, or actually it's vice versa. So the Mississippi River system being impacted by low flows and reduced ability to send barge traffic down to the Gulf has certainly affected our exports along with the exchange rates. U.S.-Mexico GMO corn disagreements is kind of a hot topic. And also, I do want to say just a few things about the EPA's recently released renewable fuel standard guidelines. And this impacts ethanol to some degree, but biodiesel a bit. So Guy, I'll just advance when you tell me to. So go ahead.
All right. Look, I think an important point impacting across all the commodity markets has been the drop we've seen in the U.S. dollar over the past month. We saw it reach a high in September. This is the index at 114.8. Since then, we've dropped down to nearly 9% to 104.8 is where it's trading at today. So we're seeing weakness in that dollar, which is making our high-priced commodities a little more affordable. And that drop's a pretty sharp drop. That said, commodity prices are still high, but I've been a bit surprised we haven't seen any demand come back into the market. And we'll talk about that when we talk about exports. What that's sort of signaling to me is we're definitely seeing some demand destruction. That said, I want you to keep in mind, this is the overall dollar index. Most of the grain importers and buyers have probably suffered a little more than what this index is indicating, and its impact on ag commodities is greater than just what we're seeing here. But I think this exchange rate issue is making U.S. ag commodities very, very expensive.
Okay.
Next one, Dan.
Yep. It's going to U.S. rail strike averted.
Yeah, look, this rail strike was averted last week when Congress, both houses of Congress, passed the bill. Joe Biden signed it on Friday. It was quite the topic here at the Country Elevator Conference in St. Louis. The biggest question was how happy were the unions? Were they going to have some work slowdowns even though they're back at work? What we heard from the railroads is most of them were pretty happy. They didn't expect any slowdown, so to speak. The other issue was the comment the railroads made was they've had two problems because this service, particularly the grain sector, has been an issue for 12 to 18 months now. And they've had problems securing labor and crewing their equipment. And that continues, although their hiring has improved and picked up a bit in the last month. In the wake of the strike, there was a concern, since there's a lump sum payout, that they might have a fairly significant exit of key personnel. The railroads indicated that they are prepared for that, and they didn't expect that exit to be very significant. So they're managing through that. So the fact that this was averted is key. It would have devastated not only the grain sector, but the U.S. economy in a lot of different ways. And I didn't think Congress was going to let that happen. That would have been catastrophic politically as well as economically. So we've sort of moved through that, and I would like to think that issue's settled for a couple years now anyways. Dan, did you have any insight on that?
Only that this is a prime example of a crisis facing the market, but the expectation was that the government would never let it happen. So it really was almost a non-market factor, just because we assumed it would never go forward. Guy, anything else in what you see there for bullet points?
No, just a comment that I think the criticalness of the rail situation has been emphasized due to the low water situation on the river and the need or the market pressures to find other forms of transport to those key export markets. The fact exports have been slow sort of helped that a bit, but that added particular pressure onto the rail system. And you switch the slide here now to the river, so we might talk about that a bit. Look, the river system was also discussed. We've you can see the top left-hand chart there. That's barge freight on a weekly average as tracked by the USDA Grain Transportation Report. You can see we've come off the previous highs that we saw in late October, November. Part of that's a seasonal move, and also we've received some key rainfalls which have helped the river, and also continued forecasts, particularly in the lower Miss, to help that situation. Yesterday's barge freight quotes are down there in the lower right-hand corner. I think the key takeaway is we experienced reduced draft, which means reduced loading capacity by the barge itself to down to as shallow as 9 foot from 10 or even 12 feet. That reduces the size and the total capacity of the barge, as well as the speed of the tows as they move down the river. So it not only takes, not only as barge freight went up, it takes more barges to move the same capacity. I think we just keep that in mind. So hopefully with the rain forecast and as we move forward, we'll see a recharge of that river system. The key river in that is the Missouri River that joins the Mississippi here in St. Louis. And as you look at the drought monitor, for some time we've seen that west of the Mississippi in key drought. So we're going to be expecting some good recharging rainfalls in the next few months and as we approach spring.
Let me step in and speak on the U.S.-Mexico GMO corn disagreement. Here's some headlines that came out here of late. And basically, the president, the leader of Mexico, Lula is his last name, proposed, you can see there in the third point down, proposed just in the last week on the 7th, proposed that the corn brought initially, that all corn brought into Mexico would be non-GMO. Well, this met with a lot of resistance, some derision from the U.S. side, and since that statement was made, you've had the Mexican government. Well, Tom Vilsack went to speak with them. When the statement was made again initially, the president said one thing, that we're going to have a 100% shift over. There was a minister, I think an agricultural minister, that said, well, we're going to work out a deal. So there was some disagreement within their own government. Since that time, that statement's been walked back a bit. Now the latest statements are that the GMO corn issue would only apply to corn for human consumption, in their food chain, or tortillas, things like that. But even with that, you have U.S. Threatening to take them to into a North American trade agreement conflict, or I guess a complaint, and the idea being that on the U.S. side, they're really reticent, the corn growers especially, really reticent to allow this to stand up at all. You can see on the third point down, this is consistent with their broader environmental view from the leaders of the Mexican government. They also proposed jumped in on a pact from or a proposal from Europe that any Brazilian soy that they had would go through a process of being assured or with legitimized certificates, I guess, to state that it wasn't in any way linked with savanna deforestation. And there are one or two areas of Brazil that are really in the middle of this controversy. So at this time, I would not say it's a non-issue, because it's as it's been discussed, it's been an issue of real contention in the U.S. It doesn't seem like it's going to hold up. I guess in the last day, they walked back. The Mexican government walked back the idea and said, "Well, we'll give U.S. farmers till 2025 to make the change." So I just would not be surprised at all. This ends up with a North American free trade zone complaint, and they go to court over it literally, and then battle it out there. Guy, any thoughts?
Yeah, just look, this was a key topic here at the Country Elevator Conference as well. One, it was pretty much said, I don't think this issue is going to go away, Dan. It's a very politically hot topic in Mexico. It was good to see about a month ago that both Brazil and Argentina came alongside with the U.S. corn growers to push the issue. Like a lot of current government policies, I don't know if it's been thought well through. When looking forward, if they should put such a situation in place, it would just really devastate their livestock sector, whether that's cattle, poultry, or pork. And if you put something like that in place, it could be quite supportive of the U.S. livestock sector, because all that livestock production would then shift back to the U.S. and be fed here. And then Mexico would be probably importing livestock products, particularly beef, pork, and poultry, rather than the corn. And it would have a significant economic impact. But yeah, it's I think we need to stay on top of this. You know, it's similar to the Europeans and their thematic issues, but I don't know if they've fully considered the full economic impact of such policy.
Yeah, it's a matter of thinking beyond stage one of what may be a laudable
there, Dan.
Yeah, what may be a laudable goal, but once you get to that, what are the ramifications of it? Let's take a look at the EPA Renewable Fuel Standard guidelines that were released and some of their impacts on biodiesel and ethanol. And here are some of the headlines that had come out of late. It's interesting to read Bunge's response. Bunge is involved quite a bit with quite a bit of investment in the U.S. renewable diesel industry. Their impact, or their intention, is to support the idea of expansion of U.S. renewable diesel capacity to about 5 billion gallons in 2024. We're at 2 billion gallons now. So, you know, that you're getting to the type of expansion that we saw during the ethanol days when we're looking at corn ethanol expansion years and years ago, 2008 plus. Part of the issue that's been supporting the soybean market has been that again, we've had high diesel prices. Here's a renewable diesel available to help meet domestic diesel demands. Greg Eibendahl in our shop is a person that has the best handle on that. It talks about the diesel market being really constrained, or the diesel industry being constrained by lack of new plants. So here comes biodiesel. And I don't again, I'm not sure of all the causes exactly of this situation, but however you want to look at it, to have high diesel prices right now is surely a boon, surely something supportive for the building of biodiesel plants. Then you can see again, U.S. biodiesel credits prices plunged due to policy weakening. So when these RFS guidelines came out, they were perceived to be, well, you can see what was stated, proposed quotas for bio-based diesel to increase 6% by 2025. That was interpreted bearishly by people in the biodiesel industry. They were looking for something much stronger. So again, kind of consistent with the industry statements, production's expected to more than double in that time, but yet the bio-based diesel increases are coming in underneath. That's my understanding. And more of the headlines that had come through, so you can kind of see some of this again. On December the 1st, US EPA proposes higher biofuel blending volumes. So there were some positives, some moderate positives in that EPA announcement for ethanol. They generally friendly language for E15. Part of that renewable fuel standard announcement also had to do with electric vehicles. Biden proposes major overhaul of biofuel law to boost electric vehicle makers. So that was at least mentioned for the first time in a renewable fuel standard discussion. And again, coming back to this other statement from Reuters, made again in terms of the global markets. Global renewable capacity growth set to double over 5 years, says EIA. Before we were talking about in the US up more than doubling. Here you've got statements like this with the expectation of this happening globally as well. So interesting to look at. Just I pulled this from BTN. Matthew Wild, Progressive Farmer Crops Editor, has a statement. A renewable diesel boom, part of the articles that he had put out. Renewable diesel production capacity has exploded. It nearly doubled from 971 million gallons per year in May 2021 to 1.92 billion gallons in May 2022, according to US EIA. So, and there you can see some of the plants. Within the last day or so, there's a discussion of major plants being built in Louisiana, again, Illinois, elsewhere. So major step up in investment, and we'll see where it goes. I would also say you can see the EIA sees US. This is another graphic from EIA. Sees U.S. diesel prices easing in 2023, but still relatively high. You can see the graphic along the years, the bottom, and then the price per gallon on the high side. So there was the high that we had seen for U.S. diesel prices heading almost to $6, and that's the U.S. average, and now having eased off to something closer. Well, eased off some closer to $5 here of late. And on the U.S. side, and their expectations that it eased down closer to $4. And a lot of the discussion about the renewable fuel standard is kind of couched in the expectation that the U.S. economy is going to weaken. The gasoline demand, diesel demand will ease, or I shouldn't say demand, it's usage. We economists we are sticklers about that. When an amount less is used, we're not so much claiming a change in demand. We're changing we're claiming it's a change in usage. It could still, demand may not have changed as a relationship. Anyway, usage to decline following and basically with the expectation that in the latter part of 2023, in coming months, that will have a weaker economy and that'll affect motor fuel demand. Would also say there's another way to view things. Lower soybean oil price boosts biodiesel margins. And they talk about crude degummed soybean oil margins increased by 6.7%. If you can see my cursor, you can see this purple line for 2023. Again, general margins running just pretty high, the highest we've seen since at least 2019. And that's starting in about the 30th week of the year. And well, actually started earlier, came down to match previous highs. And so overall, we're taking, I guess, for both corn and soybeans, we're in the energy market now, and our weakness in exports somewhat masked a little bit by developments in the domestic energy markets. Okay, Guy, let's shift over to global grain market issues, and we thought we'd talk about ocean freight, U.S. export trends, ag trade trends, China economic, and crop related moves, South American crops and markets, focusing on Brazil and Argentina. Guy, you used to work in Australia, so I think this is you'll talk about Australian grain exports, and then a bit about European Union imports and what's happening in terms of natural gas supplies and impact of natural gas on nitrogen fertilizer availability. So, Guy, let's move on into ocean freight.
Look, next slide there should be ocean freight. Like the dollar, the cost of ocean freight transportation has a big impact on our importing customers. We've seen ocean freight come down quite substantially from 2021 when it was at a 14-year high. The index now is down to about 1373, and I think it's starting to level off here. Keep in mind, this is in the wake of fairly strong crude oil prices, which cost of fuel is a big component of that. I think this decline is one stabilization of the market, but I think it's also a reflection of some demand destruction as we see total global trade probably starting to wane a bit in the wake of higher commodity prices globally on that. But we keep a pretty close eye on that, and we've seen quite a bit of volatility on this. So go ahead, next slide there.
It's also
this
it's showing
slide,
us
yeah,
still
that's
Baltic Dry Index.
that's a longer term chart. You can see back in 2007-8, just ahead of and during the global financial crisis, just pre it, we had the previous highs and we saw a very sharp collapse in ocean freight. Another reason I watch this is it's a good leading indicator of global economic health of the world. But you can see we're back down to sort of closer to more historical nominal rates, which is a good sign on that. So, okay, go ahead.
Okay, trade overview with U.S. exports and sales, looking at corn.
Yeah, just quickly want to run through corn, wheat, and soybeans just to see where we're at on the export side of things. The bar chart on the left is grain that's been shipped, and what's on the right is what's been unfilled sales or unshipped. As you can see, exports are down quite significantly this season, year to date. A number of things driving that. One is South American exports have extended further into the end of their season, basically in the wake of particularly the Argentine soy dollar and the government doing things to get the growers to let go of that with giving them a special exchange rate has been significant. One thing you do want to have a look at is the red part of the bar is Chinese purchases. Shipments this year to date are up compared to last year. However, when we look over at the unshipped sales, we just don't have those sales on the books. Now, I noticed yesterday, we had China come in and put on some fairly good sized sales, more of soybeans and corn, but without that demand there, it's just going to be really, really tough. And that's why we've seen domestic U.S. prices come down. Okay, next slide there.
And before we go on from corn, our problems in the river system that are slowing down our ability to get to move corn from the heart of the Corn Belt down to the Gulf, is that also in play along with the currency and policy issues?
Yeah, well, Yes, that's making U.S. grain more expensive. Keep in mind your Chicago Board of Trade price, with the delivery being the Illinois waterway system. That's an interior price. So with high barge freight, it makes the FOB price quite expensive. Now the two are connected, but it's connected with freight. So yeah, it's we've seen those high prices FOB to overcome that transportation. That said, if we had an export program on like we had the last 2 years previously, it would have been a significantly greater problem than what we actually have seen this season. So yes, it's an impact, but it's not as dramatic as it could have been in total. And people are looking elsewhere. You know, they're buying corn out of Argentina and Brazil particularly, but we'll see that particularly on the soybeans as we go forward here.
Okay, move on to
on this one.
Yeah,
this, I just want you to look quickly at the graph on the right. This is on the sales, progressive sales, and we're running quite a bit behind historical numbers there. So we're just, and that's what's really hanging on domestic prices. Okay, next slide. We'll move on to, I think sorghum is what the next one is.
okay. Yeah, U.S. exports and sales.
Sorghum there, Dan.
Yeah, grain sorghum's up.
Okay, it hasn't popped up. Sorghum is even in a worse situation than corn. We just haven't seen China in the marketplace. This is basically in wake of Australia's big crop last year and another bigger crop expected. But that's only about 2.6 million tons. Argentina's also had a good sized crop as well, and U.S. exports of sorghum are having to compete directly into China. As such, we've seen sorghum prices fall back to levels where it's pricing itself into both the feed market as well as potentially into ethanol. Don't think we're quite there yet, but that increased international competition is what we're really seeing, that big drop in sorghum exports. And going forward, probably expect that to continue.
It is interesting. Slide. Yeah, just a second. And in Kansas, we have seen basis levels for sorghum kind of steadily trend higher. And I get reports from people that buy DDGs from ethanol plants, and they're talking about the color of the DDGs must be reflecting some sorghum involved in the mix. So interesting. You're right. Corn sorghum basis is less than corn, but it's still quite positive, and we given the tightness of corn, there must be some people domestically using it for these other uses, like you say. Here's wheat. Yeah,
I think the thing to keep in mind on sorghum, when you put it into the ethanol grind, it significantly changes not only the color but the nutritional profile of DDGs. And DDGs are such an important value component of the ethanol grind. They're a bit hesitant to change that because then they've got to deal with their whole customer base because they're trying to sell a pretty consistent product coming from their ethanol plant. Okay, go ahead.
You're on wheat right now. Yeah,
wheat. Look, wheat, again, not a real exciting story here. Exports have picked up a bit in recent weeks, but it's still a very, very slow type situation. And the U.S. continues to struggle. Wheat being a food grain, a lot of countries are focusing on securing their food supplies domestically or more closer on that. So it's and I think the bigger crop expected, particularly from Australia and the Southern Hemisphere, is weighing on that as well. So I really don't have much to add to wheat on that. So did you have
any soybeans
put in on the wheat situation? Okay, soybeans on the next slide.
Yeah.
Soybeans, kind of a different story than corn, and this has sort of changed in the last week or so as we've seen China come in with some significant purchases. We're still running behind, and this is in the wake of particularly Argentina's larger exports when they put on that foreign exchange incentive for their producers to sell their beans. I think the number that comes from, I think that was 68 vessels, Panamaxes of soybeans. and they're working through that at the moment. And it sounds like, well, they're going to put that policy into place again till the end of the year, just to prompt that Argentine producer to let go of some of their commodities. Keep in mind, with inflation rate running just under 100%, I think it's about 85-90% in Argentina at the moment. The grower down there utilizes their ownership of commodities to hedge their cost of inputs and they're against inflation in South America. So they gave them a real strong incentive to let that go. As you can see, China's still running behind, but they have come back a bit.
Here's that weekly unshipped soybean sales figure, if you want to talk about that.
Just that, look, it's running behind. It's not bad, but it's not great. And a lot of this is because China particularly, as well as other importers, are looking to other origins, which is pushing our demand back to later in the year. I sort of compare it as if you go and buy a gallon of milk every week, if you don't buy a gallon of milk this week, you don't buy 2 next week. So I think it's sort of lost demand for the U.S.
Now, I think Antonita spoke primarily about this. Is there anything here we need to add to what Antonita had said?
Just a comment I want to add is probably more on the next slide. You can see wheat, barley, maize, rapeseed, and sunflowers are key. Looking forward, particularly for wheat and food grains, that next slide there with the global map on it, is we've got security of food supplies is reaching a critical issue in those countries that are highlighted there, predominantly in North Africa, Middle East situation. And this increase really concerns me over the next 12, 18 months as we see food prices being extremely high. Securing their supply is critical. These are also the countries that are looking elsewhere to secure supplies, particularly to the U.S. But look, it's a particular hot spot in the world anyways. And just looking forward, this is just extending that impact from that Russia-Ukrainian situation on where it's destabilizing countries around the world. And this is where I really keep a sharp focus on, particularly from a geopolitical situation. That's the only comment I wanted to make there.
Well, we have a new WASDE report coming out tomorrow, December the 9th at 11 a.m. And in the November report, we showed world minus China ending stocks to use for wheat down to 19.5%. The lowest we had been historically it was the year before that at 20.7 or 20.8. So yeah, we're tight and we're at risk. And but I guess they don't pay us to just with hyperbole cause problems. But point is, we are really tight and probably more risk in the wheat market than people have been aware of or expressing in the last few weeks in terms of prices.
Yeah.
Guy, let's both kind of go through this. I want to show the headlines for China. Probably although it's not first in order, the first in importance is that China is set to loosen COVID curbs after a week of historic protests. We saw some of this in the news, but this is a major political issue. I think I had read in it's either 8 or 12 of their largest cities, they had protests in each one, and not just a few, widespread. And so with that there was some response to lessen those COVID curbs. And because good part due to the logistical and demand issues that are wrapped in the self-imposed COVID control actions taken by the Chinese government. You have this information on December the 7th. China's trade suffers the worst slump in 2.5 years as COVID woes, feeble demand take toll, and it's COVID woes with its feeble demand. One causes the other. China, and then also China's November soybean imports drop on logistical hurdles with their shutdowns and disruptions that it was affecting how they could handle beans brought into their ports and what they do with them. And Guy, as you'd mentioned before, China ramps up corn purchases from Brazil as U.S. exports decline. And if you read into that story, China had worked out an agreement with Brazil to allow, well, in essence, to allow several of their major exporters to have licenses to be able to ship grain into the country. So now they're institutionally set up to allow that to happen. Going on, there's more. China's reopening. Well, this is a kind of a different view. China's reopening to reverberate around global markets. I think someone was trying to have a positive perspective on it. And they brought out the idea, at least in their opinion, that speedy growth could renew commodities and intensify inflationary pressure. So the idea there was that yes, China, with all the problems they're having now, the economic slowdowns, good part due to how they've dealt with the COVID issues, will probably has certainly slowed them down, and it's not a quick fix, but once now that they do seem to be opening up their economy more, there's the anticipation that you could have a positive impact on commodity prices, more so in the second part of the year. They're also wrestling with this idea of weighing what they see as an opening up of their economy with the general expectation, and now it was just stated matter of factly, the coming global recession. So they're interesting to see that narrative now that they're expecting to open up their economy, but if anything limits them, they're thinking that widespread broader recession would come in and impact not just what they buy in terms of soybeans, but what they sell in terms of their manufactured goods. One other, you and I deal quite a bit, you more so with the U.S. Grains Council. They came out here in end of last month. Asian corn import demand unlikely to see a sharp increase next year. And again, it's all these things that are gumming up their works. They're slowing them down. Guy, your thoughts?
Well, China is the one that concerns me the most. A fortnight ago, I saw an estimate that suggested that their productivity had dropped by 40%, which is quite significant. And if it has, and I'm not convinced that that's going to bounce back anytime quickly, that'll have a very significant impact on their domestic economic situation. Also, we continue to see those supply chains quietly but rapidly exit China, as what we're seeing is that reindustrialization of not just North America, but I'd put in the USMCA and Latin America in there, as well as a lot of that production is shifted back to a more secure supply chain. And part of that, we're seeing some disruption in the transportation sector. But I think it's going to make it very, very hard to China to recover in their productivity to any sort of level they were, call it pre-COVID. I don't blame COVID on it. COVID was sort of the catalyst, but it was something that was going to happen anyways. And it's interesting that a lot of that production is coming back to North America.
Yeah, the Apple plant is a main headline of them establishing themselves elsewhere outside of China's borders.
Yeah, and it's not only the high tech side, but even your textile side, some of your other sort of basic productivity of things. Anything that's a critical asset there's quite some significant government incentives to relocate that back to particularly the U.S. But it's that world trade flows are changing quite dramatically. It's been overshadowed by COVID, but this reindustrialization is quite significant.
So you and I have talked, and we've talked about 2 or 3 different perspectives on this. What the world will be watching will be just how quickly China is able to recover. What is the pace of that? So that we're watching our own economy, but we're also watching the Asian economies to see how they deal with these issues. Let's go on. Do want to mention South American crops and excuse me here. There we go. There we go. South American crop production issues. So a number of headlines, a number of thoughts, actually a whole raft of them. First is that Brazil grain crop to reach a record 302.2 million metric tons in this marketing year. That's the thought. ConAb, major crop watching group there. That was a headline earlier today. Second, as you'd mentioned earlier, the soy $2, more than 2 million tons were sold in 6 days in Argentina. Kind of buried within that was the idea that, yeah, we've had strong sales of soybeans in Argentina, but that was still down 57% of what soy $1 had for them. So, 4 or 5 million metric tons. Record Argentine freight rise this year. Dig into the details of that. It's some of the things that same issues you mentioned, Guy, for China. Again, labor, higher costs, inflation, all gumming up the works. Fertilizer production is paralyzed in Argentina for some of these same issues, natural gas availability, et cetera. We only heard a bit of it, but in Brazil, after their last presidential election, they had a lot of disagreement about that election, about its veracity. I'm just saying that's what they had, and had strikes upon and blockages along major arterials, major roads coming out of the interior, and that's what grain moves in and grain moves out, and fertilizer moves in on. So this was happening. I don't know that that's all dealt with yet. Cargill took one look at the EU's Amazon policy. Again, that Mexico piggybacked on, basically. Cargill says tough to extend the EU Amazon soy rules across Brazil. Argentina soybean area forecast could fall due to drought. They've had a serious drought there, and Guy, you'd mentioned that. And that drought's affected their soybean area. It's impacted the amount of wheat they have available to the world. And again, we're saying, well, gosh, we have other areas that have done well. That the issue is we're tight enough that we really can't afford any of these areas. I guess that's my hyperventing statement. And this is probably the big issue that keeps a lid on the soybean market. Until proven otherwise, there's expectation of just a record high 155 million metric ton crop. That's out of StoneX. Some of the better crops in past years, 125, 140, but they're looking for a tremendous crop. All is not perfect down there, but so far there are no weather conditions that are widespread enough to take people off of this general expectation. Guy, any comments on South America?
Yeah, look, my only comment would be, I guess my biggest concern going forward is the cost of fertilizer. And usually you see farmers cut back on their costs and of inputs, particularly in those areas of Brazil where the soil types need the fertilizer to produce a crop. Areas of Brazil, Western Australia, and a good portion of China, they just have to have those high levels of fertilizer inputs to produce a crop. So it wouldn't surprise me at the end of the day if yields are down significantly, even though planted acres may not be, just knowing how farmers tend to react when they have high cost of inputs.
Brazil's strongly tied in with proactive in working with Russia to buy fertilizer supplies from them. That's what we've been hearing for a good while, just because that's one of their better options, if not the best. Australia, Guy, do you want to talk about your old stomping grounds?
Yeah, ABARE came out with their latest crop report late last week. They had a record winter crop production. Wheat particularly came in at 36.6 million metric tons, which is a new record crop. That's up 14% from previous estimates. With all the rain they've had, it doesn't surprise me. Rain makes grain. Quality is yet to be determined, and that's going to be dependent on harvest weather. I know there's going to be, I'd suggest there'd be a fairly high, historically high level of feed wheat in Australia. Keep in mind, in the East, particularly 10 million tons of that production domestically is consumed by the feed sector. And most of that feed wheat finds itself into the domestic market quite quickly rather than the export market. But have heard of some shipments of feed type wheat being sold. Another key thing to remember, barley is a second largest coarse grains, feed grains out there, Australia being one of the major producers. It's the fourth largest crop on record. It's going to be interesting if China, particularly not being able to get barley out of the Ukraine and Black Sea, if they're going to remove their 80% import tariff on Australia barley, particularly as they buy quite a bit of malt barley and they need that for their beer production. Canola is key oilseed. Keep in mind, canola is 42% oil compared to soybeans at 19. It's forecast to be 6.6 million metric tons, and it's going to be pretty close to last year's record of 6.8. Could even be a record crop. Just also wanted to touch base on sorghum. They're planning next year's sorghum crop at the moment. They're expecting a good plant on the back of good moisture. Should be the fourth highest production on record at 2.6 million tons. It's a little bit below the record crop from last year at 2.7 million metric tons. And that export sorghum goes head to head with U.S. sorghum into China. The key thing with sorghum, though, it competes directly with cotton and sunflower as the summer crops. And with the cotton prices lately, I think a lot of growers are going to prefer cotton over grain sorghum. So that's sort of what we're seeing out of Australia. Continually, their export supply chain has been frustrated, particularly with the wet weather. A lot of your rail lines have been damaged or in not good operating order with the soft base under the tracks. Their roads were in extremely poor condition, being torn up as that grain moved by trucks. So that export supply chain is just continues to be frustrated and is probably booked out for the next 6 months anyways as we move into harvest.
Just a few headlines I grabbed just for your consideration. Again, price supply factors boost viability of corn, wheat, feed substitution into Asia. So again, rather than buying corn from the United States, or rather than buying high price corn with the exchange rate and our problems getting it to the Gulf, to the degree that the Australian crop is damaged, it's more that there's a higher degree of feed wheat coming out of that. The rest of Asia is waiting to buy that as a feed source. You can see.
As I said, I think a lot of that feed wheat struggles to find its way into the export market.
It's used domestically first, sounds like, and then of course Australia forecast record.
Yeah, very much so.
Okay. I just want to mention a few things for the European Union. I think this might be our last slide. At least something that I've been watching, there's the first point where the EU agrees to law preventing import of goods linked to deforestation. Very similar, same train of thought as what the leadership in Mexico had stated. So there you go. But then with Antonina, if you're still on, these things kind of may come into play for you, and if you'd like to comment on them. They have food security issues there. Again, the Commission addresses the availability and affordability of fertilizers in the EU and globally. Of course, that's following from natural gas being a main source of input for the production of nitrogen, and Russia providing quite a bit of the world potentially when free trade is moving about for NPK all over. Again, so you've had farm protests over there where EU farmers slam Commission's empty fertilizers plan, and Europe's other crisis out of Forbes, fertilizer shortage for farming in the Netherlands, in Germany. At a minimum, you have those two countries' governments formally coming up with plans to in the Netherlands to buy back farmland for and their purpose, as they stated, is to limit greenhouse gases that would come from the use of fertilizer directly, indirectly. And behind the scenes, if you read deeply on it, they also happen to be farming land that parts of the nation would like to turn into houses. So I'm not sure what the front issue is, but for Germany, probably more the issue of them coming into winter, wanting to make sure if any natural gas that they supply consumers with heating energy first and foremost, and with that they'll cut back on fertilizer use and end up and they'll buy, if they're short on grain, they can buy grain elsewhere, but they can't keep warm based on that grain. So Guy, it's just a larger issue. To me, I have broader concerns that I understand. I'm empathetic with people on the environment, with folks promoting environmental issues, but this ratcheting back of the efficiency of crop production on acres around the world, it has an impact on our ability to rebuild supplies and maintain food security for the various populations around the globe. Your thoughts?
Yeah, look, I'd concur there, Dan. I think this is a whole nother discussion, but I think a lot of these approaches are maybe ill-conceived from a longer-term situation, and just given the total tightness where we're at of food supplies around the world, the timing couldn't be worse. So
yeah,
I'll just leave it at that.
Okay. With that, I think that's our last slide. Rich, I haven't, so I'll stop sharing and take a look at any questions. Antonina, any comments on that last European Union slide at all?
I completely agree that now it is big choice for European countries in terms how to use that amount of gas that they are receiving, and it is limited. But also what I would add that since the war that started for us in 2014, in 2018, Ukraine provided embargo for import fertilizers from Russia. And then we became import a lot of fertilizers from Europe. So it's also relations between production of fertilizers in Europe, right? And then how much we will have in Ukraine. So that would be another issue for us.
Dan, I just see one question and then one comment. I think you should be able to see those. In the next years, USA is apparently to build more biofuel plants. Do you see soybeans gaining more acreage over the corn?
Yes. And that's a hard answer to just give, because we have domestic industries supported by corn production. Now we have domestic industries increasingly supported by soy production. I did mention that also canola and some other, canola in particular was another oil seed that gained in that last RFS, a discussion of how there's a pathway now. So without question, we'll have all that much more competition between corn and soybean acres. It just seems it's just the reality of it. I do see a statement down there from Richard Wilkins. Beginning in 2025, the renewable diesel credit for blenders goes away, and a producer's credit based on life cycle analysis for feedstock begins, likely to be much less financial subsidy incentive. That's possible. And thank you for that, Richard. What I would say is that again, if there's anything that does encourage biodiesel to step into the gap, it's these constraints that we have on regular diesel production. And that again, I don't know in a Machiavellian sense if anybody was engineering the situation, but I can't think of more of a market incentive to develop biodiesel than what we just had going on in the U.S. regular diesel market. Constrained supplies, high prices, the opportunity to enter into that market, and Richard, I don't doubt that that blender's credit goes away, but gosh, the market still seems to be saying, bring it on.